Hello and welcome to this video. I also thank you for showing interest in the possibility of working together at some point in the future. Over the next few minutes, I will show you a bit about my background, who I am, what I do. I will show you who I help, so how I go about helping other people building wealth using the stock market as a vehicle, while providing testimonials for your reference. I will also show you my track record in the stock market. After all, you want to make sure that you are making good investment decisions, and that means trusting your hard-earned money with someone with experience, right? With some experience, someone who can actually show you the results they've been providing over time. And ultimately, at the end of this video, both you and I will be able to determine whether or not we might be a good fit. Okay, so let's go start from the very beginning about my background. One of the best sources to collect that information from is certainly LinkedIn. And you can see that when you go to my about section here on LinkedIn, you'll come to the realization that my background is quite diverse. So I'm Eduardo, I'm the founder of LikeATortoise, and the core of what I'm doing revolves around stock market investing education, but also investment coaching and accountability, right? So I help ambitious, high income, busy professionals turn strong income into long term compounding wealth through calm, disciplined stock investing without hype, without noise, or without gamble. We at Like a Tortoise don't do crypto. We don't chase high flying tech names. We stick with what we know, and that includes stocks and stocks alone. Because we believe that stocks are the best vehicle to achieve what we want, and that is long term sustainable returns, right? I know this problem firsthand because I was once a busy, high income professional myself. I also earned well, but I didn't have the time or emotional bandwidth to constantly monitor markets, chase ideas, or react to headlines. And so, what happens is I was in a position where I wanted high returns through a structured, repeatable process that worked alongside a demanding career. So, most people, as you may well know, invest like a hare. They chase momentum, reacting to news, and panicking in drawdowns. I teach my clients to invest like a tortoise, patient, process driven, and focused on business fundamentals, not market noise. The reason my background matters to you is before investing full time, my background was actually in software engineering and psychology. And this may come to you as a bit of a shock because these are two disciplines that directly shape how I invest and also coach. As a software engineer, I was trained to stress test systems and identify weaknesses. I apply today the same mindset to analyzing cash flows, balance sheet incentives, and business models that can withstand time and volatility. But I would have to say that the most important discipline I've ever studied, it wasn't really software engineering, it wasn't accounting, it wasn't financial analysis, which I ended up studying at uni while I was doing my master's in international business management. It was actually my degree in psychology. This was very critical because markets test emotions more than intelligence. And so I'm helping clients stay calm during drawdowns, avoid FOMO in rallies, and remain rational when markets turn irrational. All right? And so I provide a proven, repeatable process that is not built on just theory. I use the same framework to manage my own portfolio, which has compounded at 20+% per year since inception. Again, no trading, no prediction, no shortcuts, just fundamentals, valuation discipline, and behavior control. The framework that I've adopted through many years of investing, many years of making mistakes as well, and many years of education, right? Because I ended up investing in my education long after uni in school. This so is I built something that is designed for busy lives. My clients typically invest 1 hour, one focused hour per week using a structured system that is built around high quality company analysis, long term decision frameworks, emotional discipline during volatility, sustainable compounding over time. So if you earn well but want to you want your money to grow, to work harder, right? Slowly, steady, and intelligently. Then you are definitely watching the right video, and hopefully at the end of this video, you'll be able to determine whether we might be working together. Okay. Even if we don't end up working together, I welcome you to our one-to-one discovery call with no strings attached here, and it's already jam-packed with action because I will tailor a plan for you based on what you tell me, based on what your goals are, your risk profile, and so on and forth. Right. Let's talk about exactly what the framework that we teach, right, and practice at Like a Tortoise. The framework is built on what we call the four pillars of investing, of successful investing. So I adopted these each of these M's after attending Phil Town's Rule Number One Investing workshop. It was a 3-day investing workshop. Many of you might be familiar with Phil Town. I already knew many of the concepts, but the way he explains it, so the way he structures it, it really comes down to understanding these four M's. And that's what we do here. However, what we cover within each varies slightly from what Town has been doing. But the core is based, so the layout or the structure of our framework is pretty much the same. We only invest in companies that have a meaning to us. I see many people making these mistakes, right? They invest in companies whose business model they cannot understand. How does the company make money? And most importantly, before any of that, you must understand whether what the company does actually interests you. So if you are not interested in what they do, don't you think it's going to be hard for you to actually stay up to date with the earnings calls and earnings reports? The answer is yes. And that's why, once again, many people fall behind. They stopped catching up with the company and they make a lot of mistakes. So first thing we need to tackle is meaning. The second M is moat, competitive advantage. We only invest in companies that have a solid competitive advantage of several of them, right? Think about a castle with a moat around it, stopping competitors from trespassing. That is exactly what we want, because over time, that creates consistency and predictability in the numbers. And that, ladies and gentlemen, is what's going to allow our money to compound nicely. Then we have management. Just like you watching this video are hoping to make perhaps an investment, right? Because that's what you will be doing with me if you decide to carry on with coaching. It's an investment that you will be making in hopes of of achieving good returns on that investment down the line. I think exactly the same way when trusting my money with management teams. I want them to be owner oriented, to have my best interests at heart, right? To be transparent about what's happening within the company. And so I only invest in companies whose management shows these qualities. Last but not least, we have the margin of safety. Once I help you to put a value on the company, this is key. You are not going to pay the fair value for the company. You are going to buy it with a 50% margin of safety, because what this will do is it will cushion your downside while greatly maximizing your upside once the market returns the stock back to its intrinsic value. All right. And once you do this, once you rinse and repeat, right, this process over time, you will be able to beat the markets sustainably. All right. And most of the time, you won't be doing much. And that's why this strategy is actually designed for people who don't want to devote much time towards their investments, because what we've done over time is we've achieved 20 plus percent annual returns while devoting just 1 hour of our time per week towards our investments. Does that sound like a good trade? In my world, that is a hell of a good trade. All right. So this is the core of our strategy, and you can see how we've been helping some people already achieving that. And sure enough, I'm going to show you a case study, and that is the case study of Merlin, one of my current clients. When he came to me, his pain point was that he didn't want his future to depend solely on his income, right? And this is what many people say. So they come to me with this problem that you guys can see right here. These are the main obstacles. information overload, endless opinions, jargon, and hot takes. Everybody knows about everything, right? Then time scarcity, limited time to research properly between work, family, and life. Maybe this is you. Maybe you find it hard to juggle your commitments, right? Or no clear, repeatable framework. I made a ton of mistakes exactly initially because I didn't have a framework. It was only then, after I started investing in my own education, that I went on to beat the market, not only to achieve good returns, but to also outperform the market over the years. So this leads to hesitation and second guessing. What is the result? Hesitation, emotional decisions, and missed long term compounding, right? At Like a Tortoise, we bridge that gap, the gap between goals and reality, and we bridge that gap by being and thinking and acting like a tortoise. Because over time, ladies and gentlemen, stocks always go up, as you can see right here. Going back to 1936, stocks always go up. There have been many periods of depression, recession from World War One, World War Two, pandemics, and so forth. However, you can see that had you stayed invested and live through all those pain, to all those to live through all that volatility, you would be very happy, right? From a returns standpoint, because you would have averaged about 9% per year while adopting a passive investment approach, which is very reasonable in my opinion, right? However, despite that, the average investor greatly outperforms the S&P 500 over time. And this is why, because the stock market is a device to transfer wealth from the impatient to the patient. And so part of what I've been doing with my clients, on top of teaching them everything that I've learned over time, right? So you have a very good solid foundation, is I also provide portfolio research, as we will discuss more as well ahead, but also ongoing accountability to make sure that you don't make rash emotional decisions. Okay? Right. And as you can see right here, behavior beats intelligence in the stock market. Look no further. Isaac Newton started investing in 1720, right? He then exited the stock market very happy, but his friends remained invested, making a lot of money. So Isaac Newton FOMO'd back into the market. For those of you who don't know what FOMO means actually fear of missing out. So he felt he felt emotionally. So it was driven by his emotions at the time, right? He saw that his friends were making money, so he piled back into the market, and that actually coincided with the peak of the South Sea bubble, and then he ended up exiting completely broke. Was Isaac Newton stupid? The answer is no. However, Isaac Newton was a human being like all of us, and he wasn't, in all likelihood, he didn't know exactly what he was doing. He wasn't aware of many of the cognitive biases that are well known and understood today. And for that reason, he followed the crowd and he got significantly hurt, right? So we don't want to do that. And this is a case study, right? Merlin, as I told you. So he came to me saying, I don't want my future to depend solely on my income. Does that resonate? And so following a 6-month plan, he opened and structured his ISA account aligned to his financial goals. He is now in the process of building a portfolio of 10 high quality companies. And as a coach, I'm helping them doing that, because we have our weekly calls, 1 hour weekly calls. And during that time, I help them. Again, we are beyond the education phase. So I'm helping them doing research, determining the value of these companies and building that portfolio, start allocating his capital. And so introduced clear rules for deploying lump sums in monthly investments. This is his case study. You can see that over time, following this same approach, we've been greatly outperforming the markets with the concentrated high conviction portfolio. All right. However, over the very long term, so we are doing 24% annualized returns, but over the very long term, we are aiming for a minimum acceptable return of about 15%. If we have more, even better. But at 15%, we are doubling money every 4.8 years, which makes us very happy, considering that the average for the S&P over the last 90, 80 years is about 9% per year. Okay? But we are doubling money every 2.7 years or so, which is fabulous. And you can see what 15% annualized returns do to your money. Let's say you invest a 10K in the first year, 10K in the second year. Look what that equates to at the end of 30 years. That is staggering compared to the S&P 500's 9% annualized returns. All right? Okay, so I offer a premium coaching program, and then the way we did this, based on feedback collecting from clients, people wanted me to stay with them for longer, right? So they didn't just want me to provide them with the education. They wanted me to work as a coach, providing ongoing accountability, doing research on their behalf, right, in helping them build their own portfolio. To that end, I now provide 6-month coaching program and the 12-month coaching program, and we have about 24-hour sessions per week. We can do this either weekly or bi-weekly. I can definitely so I can this allows me to accommodate your busy schedule, right? And this includes lifetime access to our WhatsApp and school groups, WhatsApp email support, templates, checklists, valuation tools, access to my real-time portfolio. Skin in the game is essential. So I will prove many of the ideas that I will generate, right? You will see that I will end up investing in them. Okay, so many people decide to copy my portfolio after they understand the companies, and rightly so, right? So this makes our interests fully aligned. Ongoing accountability portfolio built from scratch plus research support. However, for those of you who simply want the educational side of things, together with the portfolio built from scratch, I offer the standard coaching program. This is 3 months. It includes 12 1-hour sessions. Again, we can do them weekly or bi-weekly. The only difference between this one and the premium coaching program is that, unlike the premium coaching program, the standard program does not include ongoing accountability, of course, because we only work for 3 months, and it doesn't include portfolio research. Okay, so you can see some of our pictures right here from dear members. You can see exactly what many of our dear clients and partners are saying. You can also come here to our YouTube page, and on YouTube you will find testimonials from current clients and past clients, together with a wealth of information very about our process, LikeATortoise company discussions, and live calls as well, where I answer our subscribers' most urgent questions. All right, so I hope this, and if you are watching this, then that means you probably have come from YouTube anyway, so you are already aware of what I'm doing here, and so forth. So I hope this was insightful. I hope that you guys now have a much better understanding of what I do and how I can help you along your own journey. And if you are interested in learning more about the pricing, and first of all, we would have to determine whether I might be able to invest you in any way, right? So the best next step is for you to join the discovery call. It's completely free, no strings attached, and it will allow the two of us to understand whether we can work together. Thank you so much, and let's continue to build wealth the Tortoise way.